What's up everyone, it's Scotty with Money Investing. So very strong day for the markets, of course. We got the NASDAQ, S&P, and the Dow all rallying very strongly on the back of that inflation print that once again solidified a little bit of that soft landing scenario. So in my previous videos and last week, I mentioned that a strong jobs report obviously creates this uncertainty around rate hikes because a stronger labor market means more rate hikes from the Fed. But that's only if you look at the jobs report in isolation. If you compare the jobs report, and of course, now that we have the inflation report as well, that only solidifies the soft landing scenario, which is why the markets are rallying and of course recovering a little bit from last week's sell-off as well. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included, as well as the trading view charts and the intrinsic value, fair values for all these companies that we have on our watch list, and a lot of other benefits as well, including trade ideas. And Fiverr was absolutely crushing it today, up a little bit over 2.6%. Of course, not to mention all the alerts with Enphase. This stock just keeps on running away. What is going on now? Over $182. Bought a little bit today as well. Sold my, so I had some puts that I'd sold at close to 145 strikes. So we ended up closing those out for a good 70% profit. A lot of our members ended up closing in on those puts, 75, 70%, 65% profit. So huge congratulations to anyone who was able to take advantage on this move higher on Enphase. And in my opinion, it's only the beginning. We're only getting started here. So this is the CPI, 0.2% month over month. Again, in year over year coming down to 3%, which is much better than what the consensus expectations were. But the real important indicator was core CPI month over month increasing 0.2%. And of course, year over year with that sub 5% level, which was the most important number to be looking at. And of course, it came in very well, better than what the expectations were. This is the breakdown of those individual things. So again, month over month, 0.2%, year over year, 3%, and core increasing 0.2% also and sitting at 4.8% on primarily on the back of used car prices declining over 5.2% year over year, but 0.5% month over month. Of course, energy prices are also lower, and we do have medical care services 0.8% lower year over year, and of course, airline fares were also selling off. Shelter prices still higher, 0.4% on a month over month basis. So annualized, that's just under 5%. Something to keep in mind, obviously, as we progress here, as rents continue to be fluctuating up and down. So S&P 500 NASDAQ closed at its highest level since April 2022, bowed by cooler than expected inflation report. And this right here is going to be those interest rate expectations. And now the market's pricing in, of course, 6 cuts as opposed to 5 or even 4 from the past. Earlier, again, we've seen the markets fluctuate. And as I said before in one of my previous videos, is that there is a big discrepancy between both the Fed and what the market is doing, right? The market has been pricing in more rate cuts, fewer rate hikes, and yet the Federal Reserve has constantly told us higher for longer, no rate cuts for this year. So it's mostly been the market getting more in line with the Fed. That's exactly what's happened over the last, I would say, 6 to 12 months. The market getting more and more and more in line with the Federal Reserve. However, I think now there's going to be a turning point where the Federal Reserve is going to start being more in line with the market, meaning that even though they are suggesting no cuts, but the rapid rate at which inflation is coming down, we're actually seeing disinflation. A lot of categories are seeing deflation. I wouldn't be surprised if the Federal Reserve kind of changes their narrative and starts kind of focusing a little bit more towards pulling back on this aggressive tightening monetary policy and of course focusing on interest rate cuts going into next year, whether it's 4 cuts, 6 cuts, of course, time will tell. But I expect the Jerome Powell and the Federal Reserve to now start becoming a little bit more on the dovish side, considering that we're seeing very nice improvements on the overall inflation numbers. And again, tomorrow we're going to find out the PPI numbers, the Producer Price Index numbers as well. So that's going to be very important. So markets overall, absolutely incredible. So we had Nvidia, AMD, Meta, Google, Amazon, Apple, Microsoft, Tesla, all the big tech, all the FANG names. You guys know which ones we're talking about, all rallying very, very nicely. This right here is the entire market. Healthcare definitely struggled a little bit, so it was underperforming on the day. And this right here is going to be the last one day. All 11 sectors pushing higher, so this broad-based rally coming in with all 11 sectors participating and materials kind of leading the way. Over the last 1 week, materials once again have led the markets, and over the last 1 month, cyclicals, industrials, and technology and materials doing really, really well. This right here, silver prices, canola, platinum, palladium, copper prices all pushing higher with soybeans, lean hogs, gas, corn, wheat, oats, and volatility selling off, with Bitcoin just a little bit over 30,000 and Ether just under 1,900 as well. So overall, a very strong day for the market. Keep a close eye on crude oil, by the way, because we are seeing some momentum in crude, and that's obviously not going to be great news for the upcoming inflation report if, of course, energy prices continue to move back higher. So $80, $81 per barrel, this right here is going to be that next resistance level to watch for crude, obviously. And we've also got Bitcoin once again trading back under 31,000. It's just been consolidating sideways for the most part inside this range. And we've also got Ether that is trading at just a little bit under 1,900. So this right here is going to be that range within which Ethereum's also trading at. And of course, next resistance all the way up to 2,000. First one's going to be 1,925 to as much as $2,000 as well. So going over to the markets now, S&P 500, the massive breakout above its resistance. So we were talking about this level as being a very nice resistance, 44.50. And what happens? We see a very nice breakout pushing past over 44.50, getting up to 44.88, almost at 4,500 levels. But of course, there is still a negative divergence, right? So we're definitely seeing a lot of momentum. We're definitely seeing a lot of excitement around the inflation report. But again, we can't get ahead of ourselves. And this right here is going to be that support at 44.50. Next target and resistance is going to be 4,600. But we do have a little bit of negative divergence forming for S&P because we've got that higher high and, of course, the lower high for S&P 500 as well. So this right here is going to be that lower high. And the price itself, of course, making a higher high. So there's a little bit of that bearish divergence for the S&P. Talking about the NASDAQ, again, very strong breakout, very similar to the S&P 500. So NASDAQ also cracking above 13,900 levels. So this right here is going to actually turn into a support, at least for now. And we have, again, a little bit of that negative divergence forming for the NASDAQ as well. Next target and next resistance is going to be 14,600. So this right here is going to be that next level to watch for NASDAQ moving forward. Talking about Apple here. So starting with the first $3 trillion company, pulling back a little bit, but once again, bouncing off of its 21 EMA. So we talked about yesterday if inflation numbers are going to be good enough to kind of catapult Apple once again to back higher. And it did. 21 EMA validating that support or pushing back higher. But again, the all-time high and the resistance for this company is going to stay put at $194, $195. And that 21 EMA, once again, a very strong support for Apple that we need to watch. I would love to buy more shares of Apple. In fact, establish a new position in this company in the 120. So that's really where my fair value is going to be for Apple. Talking about Amazon, again, just kind of hovering around 130, 131. That is a very strong and important resistance for Amazon. So this right here is going to be that level to watch. And of course, that 21 EMA sitting roughly at 127. If you do see a little bit of a breakdown, I wouldn't be surprised to see it in the low 100s again. And that's really where I would be very interested in maybe adding some more shares. Some more kind of adding a little bit more to my position at those prices, and we'll be looking at selling covered calls if and when Amazon can finally break past $130 per share level. So when it comes to the second half of 2023, again, there's still going to be a lot of uncertainty, and I'm not one to actually be making predictions. But the idea is going to be very simple. We're looking at value. We're looking at good opportunities and good deals. Enphase is the only stock right now that's kind of like on my radar from a growth perspective because obviously it's been down 40-50%. It has significantly underperformed the market and of course a lot of the other tech stocks. So what I'm personally doing right now is again de-risking a little bit of a Tesla, de-risking a little bit of Meta through covered calls and again kind of allocating a little bit away from those companies over to Enphase, selling puts, and then also dollar cost averaging some of the more broader based ETFs and index funds as well. And when I do see opportunities to dollar cost average a little bit more heavier, I will do so. But again, it all comes down to valuations, right? So I do own Amazon, I do own Google, I do own Tesla, Meta, like the companies, like the tech companies, and even PayPal. But would I be interested in buying Microsoft here? Would I be interested in buying Apple here? Probably not, because again, it all comes down to what value am I getting and how much I'm paying for that value, right? It's all about price and value, as we have already learned from the most important thing when it comes to Howard Marks. So yes, a couple more interest rate hikes potentially possible, but the marginal benefit is not going to be that much. The marginal downside is also not that much. So right, the 25 basis points, if the Fed ends up doing that in July, both the marginal gain or the loss is really not that much because we've already seen 500 plus basis points worth of hikes in the last 12 months. So anything the Fed does now is not going to really impact the market or the economy all that much from an inflation standpoint, from a credit standpoint, from an equity valuation standpoint. So we're pretty much, towards the end of this hiking cycle, and maybe just one more hike and then we are good to go. Now, the real question then becomes, right, how quickly do we actually see this inflation play out? How quickly do we actually see inflation trend lower back down to 2%? And if and when the Federal Reserve will eventually start cutting rates, because that's going to be the big key there. But the only motive for them to actually cut rates is either deflation or recession. And like I said in my previous videos, right now we don't have either. So I think the probability for us to see 25 basis points, I think the most likely scenario, the most likely outcome, in my opinion, right now for the rest of 2023 and going into 2024, is that we actually see one more rate hike, 25 basis points. That's what the market's pricing in. That's what I think the Federal Reserve will end up doing. And then we stay there for at least 4 to 6 meetings. We stay there, of course, depending on inflation. If it continues to come down dramatically, then the Federal Reserve will kind of move their interest rate policy according to that plan, to that path. But that's my not really making a prediction, but that's what I expect from the market and the economy and the Fed. 25 basis points and then a pause, staying there for at least 3 to 4 meetings, maybe even 5 to 6 meetings, depending on inflation. If it continues to trend lower, then seeing rate cuts if we actually enter deflation, meaning prices are negative on a year-over-year basis. Either that, or if we enter a recession because of all the lag effects. That is when I expect the Federal Reserve to start cutting rates. Earnings season is just getting started, so we'll get a little bit of insight into how well the earnings are also doing for these companies. Talking about Tesla, and Tesla here pulling back a little bit. So green day, but a red candle, definitely suggesting a little bit of, selling pressure. Resistance going to be staying put at 275, 276 levels, and of course support level at that 21 EMA at 258 for Tesla. Talking about NVIDIA here, NVIDIA is starting to see a little bit of that breakout from that symmetrical triangle, hitting almost a new all-time high at 440. Incredible. Just absolutely insane amount of momentum for NVIDIA, and this right here is going to be that resistance. Support level is going to stay put down to as low as 405, 407, and the 21 EMA for NVIDIA as well. Talking about advanced micro devices, and AMD here continues to struggle a little bit, although higher on the day today, up almost 3%. So this right here is going to be that lower high and of course that lower low for advanced micro devices. Support level is going to stay put down to as low as $106, $105 per share. Talking a little bit about PayPal, and again, not going to talk too much about PayPal here. So a very, very significant red candle here. Selling pressure was strong intraday. Support level is going to stay put at 69, close to $70. And of course, resistance all the way up to this lower high. We have seen some decent moves in PayPal over the last few months here. So since May, PayPal is up like 19-20%. So I guess that's pretty much nothing compared to what Tesla, Meta, NVIDIA have done. But support level is going to stay put at roughly around $69, $70. And that's also going to be in line with somewhat of my fair value for PayPal. Support for Square is going to be $70. So again, almost an identical price point for PayPal and Square. They're almost trading at the same price here. Resistance for Square is going to be all the way up to $84, $85, $89. And Square has actually done a much better job in pushing higher, up over 30% compared to PayPal's 19%. And Meta had one of the best days, again, up over 3.7%. Market cap now almost approaching $800 billion. This is just a straight up uptrend. Like this is literally, there's no looking back for Meta. I mean, this has just been validating and respecting its 21 EMA so well that it's just been pushing higher. Like I have a position in Meta. It's my second biggest position, and I'm now starting to get really concerned about the valuation here as it continues to move up, almost at $309, $310 per share. So hey, can't complain when you own the stock and you're up a lot. It's one point, you obviously have to be okay with the gains, which I'm fine with, but then at the same time, I have to be aware of the valuations and whether it makes sense to de-risk a little bit, rebalance the portfolio, because again, Meta and Tesla, they've gone up hundreds of percents this year. Talking about Netflix here, Netflix on the day also pretty much trading sideways. Resistance is going to stay put all the way up to as much as 445 to as much as 450. Support level at close to $400. And again, Netflix overvalued in my opinion, trading at significantly higher valuation multiples. We got Google trading inside this downtrending channel, lower highs and lower lows. So this right here is going to be that resistance with the support all the way down to as low as 114, down to as low as 109, 110 for Google as well. And finally, we got Microsoft, Shopify, and Enphase. Microsoft trading sideways here, just a little bit under 340. Resistance going to be 351, support at 322. Lots of consolidation sideways for Microsoft. Finally, we got Shopify. Pushing higher a little bit, so 4.4%. So very strong day for Shopify. And again, it did break down below the 21 EMA, but of course with the market recovery here, pushing right back up, almost getting back up to a new 52-week high here, and the next resistance and target's going to be $75. I'm not too confident with Shopify right now from a fundamental standpoint, which is why, I'm not really interested in buying Shopify at the moment. And finally, we arrive at the crown jewel, at least in my opinion right now, a stock that is definitely showing a lot of promise, a lot of potential. Been doing a lot of research, spending a lot of hours on this company. So resistance is going to be 188. That's the next level. And beyond that, we're watching 228. That's going to be in line with those moving averages in the next resistance, as well as we have gotten rejected there a couple times. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. Again, if you want to get access to all the trade ideas, trade alerts, options alerts, everything's going to be included. Link's going to be down below. As always, happy investing. I'll see you all in the next video.